It's great to have your company for the weekly this Friday, the 21st of May. I'm Jessica Amir, a senior market analyst with Bell Direct. Well, there's about 6 weeks left until the end of financial year. This means investors are continuing to make portfolio changes ahead of 30 June, and that's holding the broad market back from hitting another all-time high. So here's 2 considerations for you. Firstly, May is traditionally the second worst month for Aussie equities, where the ASX 200 has fallen 0.5% on average. It's why the phrase sell in May and go away exists. Now, so far this month, the market is down 0.1%. It doesn't seem much, but it's really important to note this slight dip has caused the market to come to a pivotal point. A technical sell signal might be triggered and could pull the market back further. This is what technical or quantitative traders and fund managers are looking at. The circle at the top right is where the market is trading. And it looks like the 15-day moving average price of the market, the pink line, could move below or under the 30-day average in orange. If this technical event happens, the market will likely pull back. So keeping some cash aside could be wise, because if the market pulls back, investors will have the opportunity to buy stocks at cheaper prices. Also consider historically equities recover in June and sharply rebound in July. On average, the ASX 200 since it began has gained 1.4% in July. So there's a lot to be said about taking advantage of pullbacks to buy quality stocks. This week, this is what we saw. Investors bought the dip into tech, and the tech sector rose 4.3%, and the consumer discretionary sector rose 1.5%, both supported by Australia's unemployment rate falling to a 13-month low. As for stocks on the move in tech, Appen APX rose 25, Xero XRO and Altium ALU up over 8%. It's important to note the tech sector has gained ground for almost 5 trading days, but the tech sector is still 26% lower than the February peak. Think about consumer discretionary spending stocks now. Aristocrat ALL gained the most, 8%. And aside from the stocks that you can see here, we also know corporate travel, CTD, rose 7. Eagers, APE, gained 6. So from the stocks mentioned, 2 are worth highlighting. The first one is Aristocrat ALL. Their shares are in a daily and weekly technical uptrend, meaning ALL shares are likely to grow in the short term. This is supported by the fundamentals. This week, the $25 billion company revealed its unaudited financial results. 12% profit growth, 6% earnings growth over the 6 months to 31 March 2021. The full result will be released on Monday, the 24th of May. Now, regardless, after Aristocrat upgraded their earnings, Citi, UBS and JP Morgan all upgraded their outlook for the company. Citi is the most bullish with a $44.50 price target, expecting record casino revenue to eventually flow to Aristocrat. Secondly, it's worth looking at Eagers APE. Behavioural shifts, we know, are taking place due to COVID-19, with car purchases soaring. This week, APE announced it's already made a profit of about $127 million from Jan to April, thanks to this shift. Morgan Stanley reckons APE is undervalued, expecting car sales growth to continue. Morgan Stanley says Jan to April sales usually only account for about 30% of annual new car sales, meaning the strongest historical periods for car sales growth are likely to come. So Morgan Stanley thinks APE's annual profit will be $381 million this year before tax. That's 15% higher than Morgan Stanley originally forecast. And it's also above what the market was expecting profit to be, $339 million. So it's worth looking at APE and ALL. Now, what to watch next week on the economic news front? There's a bit to digest. Construction work completed for the quarter is released on Wednesday, and private sector spending data is released for the quarter on Thursday. Now, ending on some trading ideas that could be worth a thought, aside from the ones that we've mentioned. We're seeing The financial sector shine the most this month and this year. Financials are up about 2% in May, 17% higher in 2021, all because the economic heartbeat is continuing to gain strength. We saw Australian unemployment fall to 5.5%, and consumer confidence is holding at around 11-year highs. Plus, overseas in the UK, COVID restrictions have eased. This is why UK bank Virgin Money VUK is up the most this year among financial players, with VUK shares up 56%. It's worth noting Macquarie thinks VUK shares are still undervalued and should be trading at around $4. Macquarie also hinted that Virgin could be upgraded by brokers, so watch this space. Lastly, for the grand finale, Afterpay APT was upgraded by Macquarie from a hold to a buy with a $120 12-month price target. Now, Macquarie conducted a survey in the US of the buy now, pay later sector and found Afterpay was ranked the highest for having a large two-sided network of merchants and users. Macquarie's survey also found 70% of BNPL users would switch providers, and many also intend to increase BNPL use. Macquarie also expects the entire BNPL market, to grow to $2.8 trillion by 2030. However, it's really important to note end of financial year and fear of interest rates rising is keeping APT shares depressed and in a technical downtrend. So, investors may not be expecting APT shares to rebound to their February $160 high. APT has bounced, though, off its 7-month low of $82, rising to $93. But for now, investors are pretty much looking for more buying at these levels as they wait for new information before entering the market. So, it's really important to take a long-term view based on the fundamentals. And that's the weekly. If you have any questions, you can leave them in the comments section on YouTube. From all of us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.